When you hear that hedge funds are bracing for $20 billion of redemption and $13.5 billion are already scheduled to be removed, to be redeemed, to be removed and flowing out of hedge funds globally this quarter, I mean, you cannot just, brace for AMC to skyrocket in the near future. Why? Because let's go over the detail first. Citco is saying that hedge funds are bracing for $20 billion worth of redemption. Only 40% of hedge funds globally made money in the first quarter, which is really, really rare, compared with 61% in the previous 3 months. Why? Because things are bad in the market. Even for hedge funds, what we are living right now with the stock market, with the economy, the state of finance in the world, we never saw that before. We never ever have been in a situation like the one we are right now, because nobody knows exactly what is going to happen. So even for hedge funds, who used to be like the smartest people in the market, are also losing a ton of money. So when you hear such things, based on what Citco Group did, and also investors are already scheduled to withdraw $13.5 billion from the industry in the current quarter and another $6.3 billion the rest of the year, man, you can't help but, as I mentioned, gasp, because while these numbers are smaller than the first quarter redemptions of almost $39 billion, they can change significantly in either direction. So not only for the rest of the 2022 year, we're looking at 20 billion, but so far, 40 billion has already been redeemed. I wonder why in the beginning of the year, the same hedge fund started, having a 10% penalty on people, the clients, the investors willing to withdraw money. Why? Because they knew hard times were coming ahead of them. So if hard times are coming ahead of them, because if you look at, the state of the market, if you look at what inflation is going to do based on the Federal Reserve increasing interest rates, that only is enough to cause a lot of panic, because these hedge funds, for a lot of them, for the last 20 years, their model and algorithm were based off of low interest rates. So if the Federal Reserve is to increase that and match 2.75, even 2.5% interest increase, man, it means they have to shift and totally change a lot of things, the entire strategy. But what they didn't count on is, the market dumping so hard, so quick at the beginning of this year, meaning that, if I was a client from one of those hedge funds, putting my money in a index fund, I will be better off with my money being, kind of locked in, a hedge fund. So people are willing to get the money out. So if at some point these guys are not willing to shift gears, because what used to work back in 2020 is not working anymore. So either if you are short a stock and you're bleeding money in even your long positions, especially as money is rotating from the tech stocks that they love to buy, at some point you will have to either return the money to the clients like, Melvin Capital is doing, or decided to switch strategies. Instead of shorting, you will be now buying. Now, with the market finally looking as if the bottom has been found, I also guess that a lot of short sellers will be burned along the way as the market recovers. And when that happens, because it's not an if, it's a when that happens, you can bet we're going to see those 25%, 40%, 50%, maybe more than that in terms of AMC gains on a daily basis. So for that, I'm not going anywhere, man. I'm not going any damn where, because I know what I bought.